Thank you for joining me. I'm Alex, and I want to go over all the stocks I own today and why I own them and what the plan is with everything. So, long story short, the plan is to pretty much sell everything, but we'll get to more of that later. So I'm going to go over all of the stocks and why I own them and what I'm going to do with them and what the plan was when I got them. And the first stock is going to be this, and it's the only stock I ever got for referring someone to Robinhood. So there's no reason I own this, and it's probably going to get sold because I didn't do any analysis on this and I really don't know if it's even worth buying. So I'm going to show the number of shares I own, what the cost was, or the average cost, and why I'm selling them, all of them probably. So Prospect Capital, got it for free, don't really have any plans with it, so it's likely going to get sold. Only have one share, obviously. And then we have FUV, which is Arcimoto. I bought them because of another YouTuber making a video about Arcimoto, and Hyperchange. Galley is really smart and knows a lot about this stuff, and this seemed like a reasonable buy. Bought them for $15 for what, 5 shares? So $3 a share, average cost $309. Bought them because of the huge upside. Bought them also because I had $15 and didn't really know what else to do with it, and there were no fractional shares on Robinhood at the time. So still think it's a good buy, definitely would buy again, and we're up 162% on those, so definitely a good buy there. Then we have Fitbit. I've made a video about Fitbit, probably 2, maybe 3. So I bought Fitbit as probably the first or second stock that I bought on Robinhood. Back in the day when I had $5 to spare to throw on Robinhood, I would just do that, and then I sold it because I really didn't think Fitbit was worth it. And then Google decided to buy Fitbit for $7.35, I believe. And I figured since the stock price was vastly under $7.35 that it would be a good buy, and whenever I had some free money I would just throw it into Fitbit, basically for the reason of owning fractional shares of Google later. So average cost $671, total return plus 6%. Not great, obviously, but it's not nothing. So we have 40. Does it tell me here? I don't think so. So we have 42.01 shares of Fitbit, and I used to buy fractional shares as well. As soon as I got dividends, I would throw that into Fitbit. Then we have Siemens, which is a good German company, largely into the energy business, also locomotives and many other things. Also equipment for hospitals and telecommunication and so much more stuff. Huge company, good German company, very old, very much like it. Bought it apparently at $63.42. They only pay dividend once a year, which, not terrible. We're up 14% on that, only have one share, definitely going to sell it. Probably should make a video about these people soon though. Then we have Deutsche Lufthansa AG. So obviously huge airline. I think I did make a video about it. They also have a huge freight transportation business, and so I figured that they would weather the pandemic better than most other airlines. They all tanked a lot, so figured that would be a good buy. Bought them $15.74. They're down 26% since then. I wish I didn't have to sell them, but definitely would buy them at the current price. Definitely want to buy them at the current price, if I had the money for it. So we own 13 shares of Lufthansa. Then we got 4 shares of AT&T. Basically bought them for the dividend. Kind of was trying to shift my portfolio more towards dividend, in line with what Warren Buffett teaches, and so wanted to basically hold AT&T forever because they were a pretty good buy at the time. I would still buy them at the current price, and the dividend is pretty nice, so definitely want to buy them. Bought them for $28. We're up 3%. Not terrible. Fairly recent buy. I want to say like April this year, maybe March. Then we have HP. Made a video about HP being bought by Xerox, or the other way around. I don't really remember. Definitely was a good dividend at the time. Definitely would have liked to see the merger happen, because I think that would have made sense at the time, and I kind of bought that because of the merger, not necessarily because of the separate company. Still a good buy considering that the merger didn't happen yet. Not sure if it's going to, but who knows really. So average cost 19.20. It went up 5%. Definitely not unhappy about that. 4 shares. Pretty good buy there. Probably would buy again, especially at that price. Then we have one of the biggest buys that I had pre-COVID of retail. So Macys was way undervalued considering the numbers at the time. So I bought a lot of shares, and then COVID happens and the market crashed, and I bought a lot more shares, and then basically malls started closing and it tanked again, and so I bought some more shares, and here we are. So average cost $12.35. The first shares I bought was for $17, I believe. Total return negative 35%. So we lost about a third. I think that knowing then what I know now, probably wouldn't have bought them at the same price, but definitely not unhappy I bought them, and I probably would buy my Macys today, mostly for the long-term outlook, because I think that things will probably go back to normal. So we own 24 shares of Macys. Also it was mostly a dividend play at the time, and the dividend was something ridiculous, like 9%. And obviously COVID happened, they stopped paying a dividend. Happens. Nordstrom, basically the same thing. It was around the same time. It was also a dividend play. Also not happy I bought them. Average cost $27.15. I own 15 shares, and they're down almost 30% since I bought them. Also wouldn't mind buying them at that price. Also they're up 10% today, so wouldn't have minded buying them yesterday. So I think it's a good buy. I think that they will recover nicely when the whole COVID stuff is done. Who knows when that will happen though, so kind of need a long-term outlook for that. Then we have Bank of America. One of the first 5 stocks I bought. Did an analysis on them, liked the PE, liked the dividend, and just bought 1 share. Average cost $30.31. We're down almost 10% on that. I did not make the difference in dividend, maybe half of it though. I'm not entirely sure. Banks, I think, are kind of undervalued at this point, but it's hard to say if they will even stay in business, depending on what happens with big oil companies and mortgage crisis, and many things could happen. So volatility is kind of built in right now. Probably wouldn't buy them without doing a detailed analysis on that, but it seemed like a decent buy at the time, and the PE currently 13. Decent, I guess, but that's pretty much in line for what all the big banks have right now, so that's why I thought that banks were undervalued, and that's why I bought that. Then we have Bank of America, as I said, just one share. Then we have Aflac. I think Aflac is going to be a really good buy right now. I'm down 20%. I only have 2 shares. Average cost $54. Price to earnings ratio of under 7. So I think, especially with the dividend, amazing PE. Definitely think that that's a good buy right now, and I definitely would buy that for the current price right now. I do think that being an insurance company, they're fairly safe and they will recover nicely, so would buy them all day, every day, pretty much. Citibank. Did an analysis, liked the PE, which is currently under 10, liked the dividend, liked the price. Bought it for almost $80, and we're down 36% on that. So definitely a better price now than it was when I bought it. But overall, I still think that they're fairly undervalued, and I think that they're pretty safe as an investment. Definitely would want to make a detailed analysis, though, on what the risk factors are there, what their exposure is to big oil, and what's going to happen there. Overall, I think that this is still a buy, all things considered, with a PE under 10 and a decent dividend, but, who knows. One of my biggest investments, People's United Bank, Dividend Aristocrat. PE was under 13 at the time, currently under 11, currently slightly over 11. I bought 44 shares of this after I sold L Brands. Don't regret buying this at all. We're down 13%, which is not great, obviously, and the dividend didn't make up for that at all. Definitely would buy it again. Dividend Aristocrat, fairly safe. Don't think that they're exposed to a lot of risk at this point. So definitely would buy that today if I had the funds. Discover. Decent. So average cost almost $39, 16 shares. Total return is 100%. I bought them with a PE of 8, as far as I know. And I did a video on that in the same week that I did a video on Visa, MasterCard, and American Express. And it seemed like, compared to the others, Discover was way undervalued. Now they have a PE of over 23. I don't think that I would buy this stock for this price at this time. But obviously I'm not unhappy that I bought it, considering that I made 99.97% in, I assume, bought it May 26th. So the last shares. So not unhappy about that at all. 100% return is always decent. And then we go to Tesla. So Tesla I bought fairly early and continued buying, and yeah. So we have 20 shares right now. I only bought 4 shares, but that was pre-split. Total return 787%. Obviously got kind of lucky on that, or like, it depends on how you look at it. I bought the first share at 367, I think. 317. I bought the first share at 317, and then I bought a share because it dropped at 261, and then I bought a share because it dropped to 238, and then I bought a share because it dropped at 224. So clearly it kept dropping, I kept buying, and then average cost $52 per share. Now we're at 461. That includes being up 13% today. So definitely not unhappy about that. So we have a total portfolio of 12,500, which was 11,500 when markets closed, and we're up about 230% over 2 years, basically. So I started this account in March or April, in April 2018. So 2.5 years-ish for 230%, or if you subtract today, 200-ish%. Definitely not unhappy with that, and I'm sad to see it go. Now, for the reason I'm selling everything, I recently got a divorce, and I legally don't even own half of these shares. It's just that they're still in my account for the time being. So I will give my now ex-wife half of the shares, and then I'm going to sell the other half to pay off credit cards and, various other things. And then I'm going to start over by doing what I've been doing, which is just throw like $100 a month in there and see where things take me. So from this point forward, I'm going to disclose literally every trade I make in this account, and why and what and how much. Previously I couldn't do that because I didn't want to be too open about things. Bad reasons. Anyway, you'll understand. That's it for me for today. If you like this video, make sure to subscribe. I'm coming out with more videos every day before market open. I hope you have a successful day.